And we did just get a little bit of economic data that I want to mention to you. S&P Global PMI, Purchasing Managers Index, which is a pretty up-to-date measure on the economy. This is the February preliminary number, coming in at 50.2 for the composite number. If you break out just services, 50.5. If you look at just manufacturing, it's 47.8. What does all of that mean? Well, 50 is the dividing line between contraction and expansion. That means unexpectedly, the services PMI expanded last month, just barely, but did expand. So this seems to be, Brad, yet another measure of the economy that is showing some strength, not on the manufacturing side, but definitely on the services side.
Yeah, one of the pieces of information within this, important perhaps for our viewers here as well, this is the highest reading for 8 months. And what this is also signaling is broad, unchanged output on the month across the private sector. They also mentioned that service sector firms registered fractional upticks in business activity, but manufacturers there, they reported a slower decrease in output. So that a little bit more of the color that was added here. And on the terms of the new orders, those continued to contract in February. The rate of decline, though, that eased to the slowest since last October.
A couple of other quick things to mention here is we saw the first expansion in service sector output since June of 2022, even though it was a small increase. The other thing is that firms are continuing to pass on higher input costs. The rise in selling prices, and this is on the services side specifically, was the quickest for 4 months and strong overall. So that's something that maybe does not support the Fed slowing down. So that's another way to put this report in context.